How do I amend my tax return to claim the mortgage interest deduction? If you are wondering how to amend your tax return to claim the mortgage interest deduction, you are in the right place. Let's break down the steps you need to take to ensure you can benefit from this deduction. First, you will need to obtain Internal Revenue Service Form 1040X. This form is specifically designed for making corrections to your previously filed tax return. It is essential for any changes you want to make regarding your tax situation. Next, gather all necessary documentation. This includes your original tax return and Form 1098, which your mortgage lender issues. This form reports the total mortgage interest you paid during the year. You may also need any other documents that support your claim for the mortgage interest deduction. Now, let's determine your eligibility for the deduction. You must be legally responsible for the mortgage debt. The loan should be secured by your home, and it must have been used to buy, build, or substantially improve your qualified residence. The loan amount must also fall within the Internal Revenue Service limits, which are generally up to $750,000 for mortgages taken out after December 15, 2017. Once you have confirmed your eligibility, calculate the deductible amount. Using Form 1098, identify the total mortgage interest you paid during the tax year. Be sure to separate any points paid on the loan, as these may also be deductible but need to be reported separately. Next, you will need to complete Schedule A, which is used for itemized deductions. On your amended return, fill out Schedule A to include the mortgage interest deduction you missed. Enter the deductible mortgage interest on line 8A and any additional deductible points on line 8C. After that, fill out Form 1040X in this form. Explain that you are amending your return to include the mortgage interest deduction. Adjust your taxable income and tax liability based on this new deduction. Now it is time to file your amended return. Submit the completed Form 1040X along with the updated Schedule A and any supporting documents to the Internal Revenue Service. Make sure to keep copies of everything for your records. Lastly, consider the timing and deadlines. You generally have up to 3 years from the date you filed your original return or 2 years from the date you paid the tax, whichever is later, to file an amended return. From the perspective of real estate investing, correctly claiming the mortgage interest deduction is important. It can significantly reduce your taxable income related to your investment properties. However, remember that mortgage interest on rental properties is not claimed on Schedule A but rather as an expense on Schedule E, which is for supplemental income and loss. If your property was used partly for personal use and partly as a rental during the tax year, you must allocate the mortgage interest accordingly. Claim the appropriate portion on Schedule A for personal use and on Schedule E for rental use. Be careful not to claim the same interest twice. Amending your tax return to claim mortgage interest deductions ensures your tax filings accurately reflected your real estate investments. This can improve your overall return on investment by reducing your tax burden.